If you are currently receiving Social Security, SSI, or VA disability benefits, stop what you are doing and pay close attention. Because what you are about to hear in the next few minutes could directly affect the money hitting your bank account right now in 2026. There are real dollar figures on the table, a confirmed cost of living adjustment that has already taken effect, critical information about state supplements, Medicare deductions, and veteran benefits that most people receiving these payments have never been told about. This is not speculation. This is not clickbait. This is a thorough, detailed breakdown of exactly what has changed, what you are entitled to, and what steps you need to take today to make sure you are not leaving a single dollar uncollected. Welcome to SSA and SSI Guide, your trusted source for clear, accurate, and actionable information on Social Security, supplemental security income, and federal benefit programs. Let us get into it. What the $2,400 boost actually means. The phrase, the $2,400 boost, has been circulating across social media platforms for months. If you have seen it and wondered what it actually means, you are not alone. The confusion is completely understandable because the number is real, but the way it has been presented in many corners of the internet has left millions of beneficiaries either waiting for a check that does not exist in the form they were told or dismissing the actual increase they are owed because the framing seemed too dramatic to be believed. So let us be precise. According to the official announcement published by the Social Security Administration on October 24, 2025, Social Security benefits and supplemental security income payments for approximately 75 million Americans received a 2.5% cost of living adjustment, known as the COLA, effective for the year 2026. That is the confirmed official figure straight from SSA.gov, and it represents real money for an enormous number of people. Now, here is the math that connects that percentage to the dollar figure you have been hearing about. The average Social Security retirement benefit before the 2026 adjustment was approximately $1,976 per month. After the 2.5% COLA was applied, that average monthly benefit rose to approximately $2,025 per month. That is an increase of roughly $50 per month for the average retiree. Multiply $50 by 12 months and you arrive at an annual increase of approximately $600 for the average beneficiary. That is real money. That is meaningful financial relief for millions of households. But it is not the same as a flat $2,400 payment deposited into every account all at once. Understanding that distinction matters enormously, both so you are not disappointed when your check does not look the way you expected, and so you do not dismiss the actual increase you are owed. The $2,400 figure that has been widely circulated is most accurately understood as a cumulative annual figure that applies across different benefit tiers, not as a single uniform payment for everyone. For higher earners and long-term beneficiaries with strong work histories, for people who delayed claiming until age 70, and for veterans who receive both VA disability compensation and Social Security simultaneously, the annual increase in total payments can reach and in some cases exceed that $2,400 threshold when you add everything together across the full year. To put the upper range in context, the maximum possible Social Security retirement benefit in 2026 for someone who delayed claiming until age 70 reaches approximately $5,180 per month, which translates to more than $62,000 annually. The COLA applied to a benefit of that size produces a very different annual increase than it does for the average retiree. The bottom line from the SSA's own official press release is straightforward. This cost of living adjustment is higher than last year's and the money is confirmed. You deserve to know exactly what share of it belongs to you. SSI recipients' important payment date details. For the approximately 7.5 million Americans receiving supplemental security income, there are additional specifics that deserve direct attention. According to official information published on SSA.gov, SSI recipients saw their increased payments begin on December 31st, 2025, one day earlier than many expected. This shift in the payment date was not an error, and it was not caused by any processing issue. It occurred because of how the federal payment calendar is structured. When January 1st falls on a federal holiday, SSI payments are issued on the preceding business day, which in this case was December 31st. If you are an SSI recipient and you were confused or concerned about why your payment date appeared to move forward, that is the complete explanation. The system worked exactly as it was designed to work. Here are the updated maximum federal SSI benefit rates for 2026, following the COLA increase. For an individual recipient, the federal maximum is now approximately $967 per month. For a couple in which both partners are eligible for SSI, the combined federal maximum is approximately $1,450 per month. These are the federal baseline figures, and they are important. But here is the part that many SSI recipients are never told, and it is a detail that could mean the difference between receiving what you are fully entitled to and leaving money uncollected every single month. The federal benefit is the floor, not the ceiling. In many states across the country, recipients are entitled to additional payments on top of the federal SSI amount through what are called state supplementary payments, sometimes referred to as SSPs. These additional payments vary significantly depending on where you live, and they are not automatically announced or clearly explained when you first begin receiving benefits. California is one of the most generous states in the country when it comes to SSI supplementation. Eligible recipients there can receive substantially more than the federal maximum through the California State Supplement Program, which is administered through the state's Department of Social Services. New York also provides meaningful state supplements, which means a recipient living in New York City may receive a significantly higher monthly payment than someone living in a state that provides no supplement at all. On the other end of the spectrum, states like Mississippi, West Virginia, and several others do not provide any state SSI supplement, meaning residents there receive only the federal benefit amount with nothing added. Some states, including Massachusetts and Connecticut, have gone further by offering additional programs specifically designed for low-income seniors that function alongside SSI to help reduce costs in areas like housing, utilities, and healthcare. If you live in a state that provides supplemental payments and you are not currently receiving them, you could be leaving real money uncollected every month without ever knowing it. The way to check is direct and straightforward. You can visit SSA.gov, navigate to the benefits section, find the SSI page, and look specifically for information about your state's supplemental program. Alternatively, you can call your local Social Security Administration office and ask this question directly and verbatim. Am I receiving any applicable state supplement in addition to my federal SSI payment? Write that question down. Ask it exactly that way. If the answer is no, and you believe you may be in a state that offers supplemental payments, ask for clarification, and ask for it in writing. This is your money, and you are entitled to a clear, documented explanation of what you are and are not receiving. Veterans and military families, what you need to know. For veterans and military families, this section carries particular significance. And the information here is not widely understood even among those directly affected by it. VA disability compensation is legally required by federal statute to increase by the same percentage as Social Security. This requirement is written directly into federal law under Title 38 of the United States Code, Section 5312. In practical terms, that means the same COLA increase that applied to Social Security benefits in 2026 also applied to VA disability payments, effective December 1st, 2025, with the first increased payments issued in January 2026. Let us put real numbers to that, so the impact is concrete. A veteran rated at 10% disability saw an increase of approximately $4.91 per month from this COLA adjustment. At the higher end of the rating scale, a veteran rated at 100% disability without dependents saw their monthly base compensation rise from approximately $3,737.85 to approximately $3,831.30, an increase of nearly $94 per month, which translates to more than $1,100 in additional income over the course of a full year. For a veteran rated at 100% disability with a dependent spouse, 2 dependent parents, and 1 dependent child, the maximum monthly payment rose from approximately $4,433.39 to approximately $4,542. These increases are automatic. Veterans do not need to file a new claim, contact the VA, or take any action whatsoever to receive them. The VA applies the adjustment directly to the compensation table, and it takes effect without any steps required on your part. Here is the detail that brings the $2,400 annual figure into sharp and specific focus for veterans in particular. If you are a veteran who receives both VA disability compensation and Social Security benefits, you received a COLA increase on both payments simultaneously. That is a percentage increase applied to 2 separate income streams at the same time. For veterans in that situation, the combined annual increase across both benefit sources can absolutely reach or surpass $2,400 in additional income per year. It is real, it is confirmed, and it is in effect right now. If you are a veteran and you believe your current disability rating may not accurately reflect the severity of your condition as it stands today, that is a separate matter from the COLA increase, but it is one genuinely worth addressing. A rating increase is not automatic and does require action on your part. You can pursue a review through an accredited VA claims representative, which is available at no cost through organizations like the Disabled American Veterans, the Veterans of Foreign Wars, and the American Legion. Many veterans are underrated relative to their actual medical condition, and a rating adjustment can mean hundreds of additional dollars per month permanently. SSDI recipients, your 2026 update. For recipients of Social Security disability insurance, the COLA increase applies to you as well. Your monthly SSDI payment increased automatically in January 2026, and no action was required on your part to receive that increase. Additionally, for SSDI recipients who are currently working or who are considering a return to part-time work, there is a separate update worth knowing. According to the SSA's 2026 official guidelines, the substantial gainful activity threshold, the maximum amount you can earn each month before your employment begins to affect your SSDI eligibility, increased to $1,690 per month in 2026. That is up $70 from the prior year limit of $1,620. If you are on SSDI and doing any part-time work or considering it, you now have a modestly wider window before your earnings level triggers a formal review. That additional breathing room, while not dramatic, is genuinely meaningful for those carefully managing both disability income and part-time employment. The Medicare Part B offset, what actually lands in your account. There is one aspect of the 2026 increase that requires direct and transparent discussion, because it directly affects the net amount you actually see deposited into your account, and it causes significant confusion and frustration when it goes unexplained. While your Social Security benefit increased by the confirmed COLA percentage in 2026, the Medicare Part B premium also increased during this same period, rising from $174.70 per month in 2025 to $185 per month in 2026. That represents an increase of approximately $10.30 per month. Because Medicare Part B premiums are typically deducted directly from your Social Security payment before it ever reaches your bank account, this premium increase partially offsets the COLA raise you received. For the average beneficiary, the actual net take-home increase, after the Medicare Part B deduction is factored in, is approximately $40 to $50 per month, rather than the full gross increase the COLA percentage would suggest on its own. That information is not meant to discourage you. the increase is still real, and you are genuinely receiving more money than you were before. But knowing the difference between the gross COLA percentage and the actual net increase that lands in your account is something every beneficiary deserves to understand clearly and upfront. You should never be surprised by the number you see when you check your bank statement. There is, however, a way that some beneficiaries can avoid this offset entirely. If you are on Medicaid and you qualify for the Medicare Savings Program, sometimes referred to as the MSP, your state may cover your Part B premium entirely. If that applies to you, you would keep your full COLA increase without any Medicare deduction reducing it. There are several tiers within the Medicare Savings Program. These include the Qualified Medicare Beneficiary Program, the Specified Low-Income Medicare Beneficiary Program, and the Qualifying Individual Program. Depending on your income level, one of these programs may cover your Part B premium in whole or in part. In 2026, if your monthly income is below approximately $1,660 for an individual or $2,239 for a couple, you may qualify for this assistance. To find out, contact your state Medicaid office directly or call 1-8006-334-227 and ask specifically about enrollment in the Medicare Savings Program. This single step, if you qualify, could effectively return an additional $185 per month to your household budget every single month going forward. That is a meaningful amount, and it is absolutely worth making the phone call to find out if you are eligible. Legislative update. Tax relief currently moving through Congress. On the legislative front, there is a development that every Social Security recipient should be actively monitoring. There is currently legislation moving through Congress that includes a new senior tax deduction, referenced in some reports as part of the One Big Beautiful Bill, which is specifically aimed at reducing the federal tax burden on Social Security income for seniors through 2028. Under current law, depending on your combined income level, up to 85% of your Social Security benefits can be subject to federal income tax. That is a provision that has frustrated seniors and retirees for decades, and the changes proposed in this legislation would meaningfully reduce that tax burden for a significant number of recipients. It is important to note that as of this recording, this legislation is still working its way through the congressional process, and the final details and specific provisions have not yet been officially confirmed. SSA and SSI guide will keep you fully updated the moment anything is finalized and signed into law. In the meantime, the most practical step you can take right now is to consult with a qualified tax professional or reach out to your local SHIP counselor. That stands for the State Health Insurance Assistance Program. SHIP provides completely free benefits counseling and can help you understand exactly how your current Social Security income is being taxed today and whether any proposed legislative provisions may reduce your tax liability going forward. 3 concrete steps to take today. Before we close, here are 3 specific, actionable steps you can take right now to make sure you are receiving every dollar you are owed. Step 1, log into your My Social Security account at ssa.gov or call 1-800-77-21213 and verify that your 2026 benefit accurately reflects the COLA increase. Compare what you are receiving now to what you received in 2025. If the numbers do not add up as you would expect, ask for a written explanation. If you are an SSI recipient, ask specifically and directly whether you are receiving any state supplemental payment you may be entitled to based on your state of residence. Step 2. If your monthly income falls below the thresholds mentioned for the Medicare Savings Program, contact your state Medicaid office or call 1-800-633-4227 to ask about enrollment. The Qualified Medicare Beneficiary Program and the related programs within the Medicare Savings Program can cover your Medicare Part B premium entirely or in part, and many seniors who qualify for this assistance are never informed it exists until they specifically ask. Step 3. If you or a family member served in the military and is currently receiving a VA disability rating below 100%, contact an accredited VA claims representative through the Disabled American Veterans, the Veterans of Foreign Wars, or the American Legion, and request a review to confirm that your rating accurately reflects your current medical condition. The COLA increase is automatic, but a rating adjustment requires your action, and it can mean substantially more income every single month for the rest of your life. The 2026 cost of living adjustment is confirmed and fully in effect. The increases to Social Security, SSI, and VA disability compensation are documented in official SSA.gov data and codified in federal law. For the 75 million Americans affected by these changes, knowing exactly what you are owed, down to the last dollar, is not just useful information. It is your right. Thank you for spending this time with SSA and SSI Guide. If this breakdown helped you understand your benefits more clearly, please share it with a family member, a neighbor, a close friend, or anyone in your community who receives Social Security, SSI, or VA disability benefits. There are seniors and veterans in every community who need this information and who may not know where to find it. One share can make a real and lasting difference in someone's financial life. Stay subscribed to SSA and SSI Guide for continued updates as payment schedules shift, benefit rules change, and new legislation moves through Congress. The information will always be presented clearly, accurately, and with your best interests at the center. You earned these benefits through a lifetime of work and service. Make sure you collect every single penny of what belongs to you.